All right. I'm going to repeat that again. So today what we're going to talk about is the Elliott waves. So we've spoken in the past about market structure and how you can tell when the market shifts from an uptrend to a downtrend or a downtrend to an uptrend. We've spoken about breakouts within a structure. And when that breakout occurs, there will be always a retest to confirm that breakout. We've also spoken about, supply and demand zones. We've spoken a little bit recently about, the adjustments one needs to be able to make when in a trade. We've had kind of topics all over the place. And, the Elliott wave alone is something that I want us to discuss today because it's important. Sometimes when you're in a trade and, sometimes you may hear me say, oh, it doesn't make sense why the market continues to make this movement or towards the upside or to the downside. But then when I come back, look at the trade and understand why it's making the move, you'll grow to understand how important that the Elliott waves come into play when the market tends to move like this. For instance, who here can attest that they've entered a trade and they swore that the trade was exhausted in terms of the market going up and you were trying to sell and the market just kept going up and up and up and up? Or towards the opposite side, you were trying to sell and, you were trying to buy and the market just kept going down and down and down. Who can attest to that?
Me.
I can.
Yeah, so as you guys can see, what we're going to discuss today is understanding why this happens. Now, each wave of the market represents what's going on with the market. So for people who like analogies or, like to look at the market in a way where they can understand it, what you want to understand is very simple. A breakout occurs, the market must come back and retest, right? After the breakout and the retest occur, then you will have continuation of price towards the market. If that continuation breaks out of a price or a zone, it has to come back and retest it, right? So if you think about it, you're now looking at a zigzag towards the upside, right? And what happens is, I want you guys to gain familiar with all of this because of the fact that in the end, once you guys understand the basics of supply and demand, the basics of market structure, the basics of breakouts and fakeouts, you start understanding how to spot a trend, how to spot a channel, how to put down a Fibonacci to understand if the market is retraced to its point, and if it does hit a certain retracement level, if it's going to break it or fake it out or whatnot. You understand? So, give me 1 second. I'm gonna mute you guys real quick. So I'm gonna pull up my charts here, my graphs here, and we'll talk about the Elliott waves, wave by wave. And here we go. So let's say the market's going on an uptrend, right? And as the market is going on an uptrend, the first move towards the upside, that will be called wave number one. So if you guys ever hear me call out a trade and I say, okay, this is the first wave. What I mean by that, this is the initial move towards that direction. So if the market's on an uptrend, we want to see that first wave, right? The first wave to the upside. And basically, in layman's terms, and how these operations work, this is just when traders start to see that the market will go up and they start buying, right? Because, when there's demand, price is going to go up. Wave two, you want to think of that as the retest of that initial move. So the initial move went to the upside. The market broke that price or the zone. Now we need the market to confirm that price or zone by coming back and retesting it, right? This is when people start to take profit. This is when the price begins to fall, causing the price of the trade to drop, right? Because there's not as much people buying. So that's why retest occurs. Someone thought, oh, let me enter this trade real quick. or a few people thought about it, you know? And as the market starts to go up, that's when we have the third wave. The third wave, I want you guys to write this down because it's very important you understand this when looking at Elliott waves. Between the third wave and the fifth wave, and I don't mean between 3, 4, and 5. I mean, it's either the third wave or the fifth wave that is your extended push. Okay? And I'll get into detail to that in a second. But wave number 3 usually is your strongest push to the upside if this is an uptrend, right? Because people are realizing that the price retested that area. And what is confirming? Glory, what confirms a breakout?
A retest?
A retest. And once we have a clear retest, the market's going to continue in that direction, right? So the same thing goes here. Wave number 3, this is a breakout. There was a breakout that occurred. We had the retest. Now this is the continuation. For those of you guys who like patterns, right? Candlestick patterns. You look at a bullish falling wedge, right? I'll show you that candlestick pattern real quick. A bullish falling wedge, right? When the market goes up, but then it creates lower highs and lower lows, that's a continuation pattern, you know? So when the market is making this move, right? Here's 0 to 1. Here's the retest of that breakout. Here's 3. That's the continuation of price. The reason why the wave number 3 is usually the strongest push is because the people who are entering the trade after that retest spotted that opportunity. Maybe they identified the pattern. Maybe they identified the fact that the price retested the previous breakout and that was a continuation pattern. Whatever it is. But now we're having a new high created, right? Here's our higher high, right? Now we have a new higher high. Jose, Furman, how many touches to the trend confirm that trend?
3.
3 touches, right? So if a trend we're focusing on just the support of the trend, right? Then in a channel, we're also focusing on the what of an uptrend? An ascending channel, in this case, we're focusing on the resistance, right? And that gives you a ascending channel. So if you notice, you're going to have 1, 3, and 5 towards the upside of an uptrend. On a downtrend, it would be 1, 3, and 5 on the support. Okay? But back to the wave meanings. And before I move on to wave number 4, is everybody on the same page with me? Sala, make sense? Noel? Jose, you guys can just type it in the chat instead of speaking out. Jomar, make sense? Joel? Jeffrey? Glory? Dean? Brandon? Brad?
Good.
Perfect.
Everybody else good?
Yeah, they're writing in the chat. Yes, yes, good, good here. Yes, it does. Perfect. Furman, let's see. Joel. Gonzalez, you're understanding it, right? I know we went through this in person as well. Perfect. So, again, Furman, or let's try someone else. Jeffrey, if wave number 2 was the retest for the first wave, then wave number 4 is the what for the third wave? Let me see.
Resistance?
So here, if a breakout is confirmed by a retest, right? So the price broke out and the second wave was the retest of the first wave. Then when the third wave made its move, the fourth wave is the what? The retest, right?
The retest. Okay.
Of that breakout.
Okay.
So same thing. Again, this is when people start to take profit, causing the price to fall, right? Some people will still hold that trade, and they're just buying the retest, right? Because a retest confirms that breakout. So that means that there's another push to the upside coming. This is when the market usually reaches its peak. Now, earlier I mentioned to you guys that it's either the third or the fifth wave that makes its extended push, right? Brandon, what I want you to understand is if the third wave was not the extended push, I spoke to you a second ago about that in the fifth wave, this is the peak of the trend. So if that third wave didn't make an extended push, then you're usually going to see that fifth wave make its extended push. And what I mean by that is it's going to go past a specific resistance or supply zone, kind of fake out of it, and then when it gives up that exhaustion and it's no longer going up, that's when we'll start to see the correction. All right, the corrections of the market, right? It's called the corrective waves. What we were describing earlier, the 0, the 1, the 2, the 3, the 4, the 5, these are your impulse waves. So this is the market making its impulsive move to the upside or downside. And then we have our corrective wave, which is when the market has to come back and correct itself. Because overall, if this was the overall movement to the upside, to confirm that upward movement, Brandon, what do we need at all times? Let's see here, Brandon Moya. Can you hear me, Brandon? Or you hear me now?
Yeah, I hear you.
So if the market was going towards the upside, right?
Mm-hmm.
The reason why the corrective waves move the way they do is because it simply needs to what?
Retest.
Retest, correct. So A, B, C, D, you're usually going to see that extended move towards the downside. All right? So let's go back to it. Let's pick on someone. We'll start with you, Brandon.
Okay.
So on the first wave of the market's movement, right? So let's say usually 0 would be right after D, right? So I didn't put D here for some reason, but here's D, right? The wave D on the corrective movement. You have D, so then you have 0, 1, 2, 3, 4, 5, right? To the upside.
Mm-hmm.
And I'll show you guys in the live chart in a second what I mean by that. But here we have 0. That first wave, what is this? What does the first wave indicate?
And I want to say uptrend, but I don't think that's correct.
It's the first initial move of the trend, remember?
Mm-hmm.
Remember, try to keep it. Remember the acronym that we discussed over there in the workshop? Keep it stupid simple, right? Keep it simple as to the point where you can always understand what we're saying. The first wave is always that first move of the trend. So if the market made that first wave and it made its move to the upside, in order for that trend to continue, we need to come back and retest the price it broke out of before it continues going up. Now let me ask you this. If the market comes down and breaks past that price that it originally broke out of and it came back to retest, do we still have an uptrend?
No.
No, because it's a fake out, right?
Right.
Remember we discussed fake outs? For those of you guys that don't know what a fake out is, if you go on your course and download, your cheat sheets, here's a breakout to the upside. We need to retest before it continues going up. A fake out towards the upside is when the market shoots up, it breaks back in and retests. And then that signals that the market is going down. So if we were looking at this here, and instead of the wave number 2 retesting that price and continue going up, she broke out of it, then we no longer have a valid uptrend, right? So then the Elliot waves kick in to the downside here. 0 to 1, first initial move to the downside, right? Then we have the retest. Then we have that either that extended push or just the third wave. For the fourth one, we have the retest. And if the third wave did not make that extended push, you will see the fifth wave make its extended push to the downside, right? So let's look at some examples. I'll give you guys an example I did here with Euro JPY. So here's Euro JPY. I did my my Elliot wave based off this initial move to the upside, right? Is wave number one. Notice what happens. The market came back and retested here. Then we had wave number three, right? The market shot up, came back. Once it hit this point, it came back down and retested. Now, this is a prime example of using the Elliott waves along with your zones to determine where the market is heading to next. So what I'm going to do is show you guys real quick. Pay attention to the price after wave number 4 to number 5, how it hit it, that point, and then she started correcting herself before it decided which way to go. So I'm going to press play. And let's look at it here. So I predicted this trade before it happened that it was going to go from the 4th wave to the 5th wave, right? Notice what happens. From the 2nd wave after the retest to the 3rd wave, this was not the market's extended push. The extended push actually occurred from the 4th wave all the way to the 5th wave. And what did the market do after that? Here's 5, right? And we have A, B, C, D. Look what happened. The market dropped. Let me know if I confused anybody there.
I have one question. When you mean extended push, you mean like the furthest, the furthest way it goes out.
Think of it as if Apple Maps gave you the direction to somewhere and Google Maps gave you that same direction to somewhere, but it got you there it took more time, right?
Mm-hmm.
Think of it like that. Now, here, from the 2nd wave to the 3rd wave, that 3rd wave or that push to the upside should be the longest move of the market. Since it wasn't in this sense from zone to zone here, it wasn't until the market came back down to retest, right? It came down, shot up a little bit, failed to break the zone here. What did it do? It faked out, shot up, retested this channel it was in, and then she shot up to the next zone.
Mm-hmm. Okay.
So the difference between price, when I say extended, the difference between wave number 2 to 3 is not greater than what it was from 4 to 5. And I mean by pips. You understand? Brandon, you had a question?
No, you explained it because I was gonna ask about that fake out right there to see if that, like while you're watching the trade live, would that have worried you at all watching that fake out?
No, not at all, because there was never a retest after the fake out showing me that the market was going down. It broke back in, you know? And then if anything, it gave me an even clearer cut that it was going because here's a double bottom on this demand zone, right above it actually. Brad, any questions there?
No, I'm good here.
Perfect. Dean? Gloria, any questions?
None at all. Thank
Jeffrey,
you.
anytime. So Jeffrey, you got any questions?
No.
Make sense to you or no?
Well, to be quite honest with you, just like, can you explain that the last part a little bit one more time?
Of course, that's what I'm asking. I want to make sure. I want you to understand something, Jeffrey. I know you recently just started joining the webinars. I don't care for you to stop me and ask a question unless I ask you, hey, let's save the questions for the end. I'm always going to chime in because I want you to be on the same page with me. I don't want to keep rambling and you're left behind and you know this webinar was just a waste of time. Yeah, I want you understanding what we're discussing. So, for someone like you, you're new here, right?
Mhm.
The market, when the market is going upwards in price, right? Because here each candlestick represents time and change in price of the exchange rate, right? Between the two currencies. So here we're looking at the euro against the Japanese yen, right? So if you look to your right here, this axis over here with the prices, as the market's going up, there's a change in that price amongst the time that we're looking at. So in this case, we were looking at the 4-hour chart, meaning each candle represents 4 hours, right? The Elliot wave just tells you how the market trends to the upside or to the downside, right? So you have an impulsive wave and you have a corrective wave. The impulsive wave is when the market is moving towards the upside. The corrective wave is what the market does after making its move to the upside, right? And it's like the market corrects itself because, you know, as the market gives people profits, it has to get back the profits that it gave away and take money away back from other people who don't know what they're doing, right? And it's like the famous saying, right? What goes up must come down, and what comes down must go up. So in the end, as the market is making these waves amongst this trend to the upside, right? We're paying attention to what happens in between each wave. So this is the first initial move to the upside, right? Then we had the market come back down and retest. After the market retested that price, what did the market do? Shoot up to the upside. After that, what did the market do before continuing to go? Came back down. You see the pattern?
Yeah.
And since this was not the furthest move that uptrend made, when the market came back to retest for the fourth wave, it gave us even more confirmation here. So how did I know? I know this is a question someone was going to ask. How do I know that this is going to be the extended wave, right? Well, if I was predicting that this is a channel right here, right? And based off of the 2 touches to this channel, if I drew my channel out, I knew that if it hit this channel here, after the retest, since this is creating higher lows, I know that eventually price needs to break out of the zone that it's in, right? And go for the next zone. Because based off of my trend line at the top of this channel, that would be a price that makes sense after the retest of this breakout. Does that make sense?
Yes.
So if I knew that this was going to be my extended move in terms of difference of pips, then all I needed to look for was my confirmations to the upside showing me that the market is going to make that move. So Furman, I know you asked me, does that make sense to you?
Yeah.
Perfect. Jeffrey, you too, right?
Yes, I'm good.
So once the market makes this move, this is the impulsive move because the market is impulsively going to the upside. After that fifth wave is finished, notice what the market's reaction was. It came down a little bit, and then it just shitted down. Make sense? And then now we have the market correcting itself. So what did the market do right after that? Came back up. Then what did it do after that? Drop. What did the market do after that? Came back up, drop again, shot back up. Guess what we have now? We have a new impulsive wave here. Here's the first wave. Here's the retest. Here's the third wave. Here's the retest. Explains why the market made this extended push. What did the market do now? A, B, C, D, right? So let's go one by one. Jomar, make sense?
Let's see.
Let's see. Jose Gonzalez, that makes sense?
Yes, sir.
100%, man.
Brad, how you feeling with this?
Feel good here.
Perfect. I want to know if Dean feels good. Whenever Dean can answer. Brandon, how you feeling? I didn't hear you, Brandon. Say what?
Then I'm good.
Perfect. Glory, makes sense? Noel, Sada? You guys can type or speak up. It's cool.
Yeah.
Joel, you good?
Yeah. Just listening.
Perfect. So let's go ahead and put this on a live chart, right? So let's look for, I need a blank chart. Who wants to give me a currency pair to look at?
How about gold?
Gold, I got you. I'm selling gold, by the way, Brad.
Me too.
Learning.
Yeah. I hope it hits rock bottom.
You buying oil or no?
I bought it last night and I sold it this morning because I got hit and I should have held on. I got scared. I'll say it that way.
It's all good, man. Oil's a tough one, but gas is high right now. Gas is like $3 over here. Let's see.
Yeah.
Tomorrow's yellow folder, right?
Wednesday, right? Tomorrow's Wednesday.
Yeah. Yeah, gold or oil's day.
Yellow folder.
So I'm gonna look at this on the daily chart, right? So the market was on a downtrend, right? We had the first initial move, corrected itself, right? So 0, and I'm gonna use the Elliot wave here. 0, 1, 2, right? 3, 4. Look at the impulsive move of 4 to 5. Make sense? I want everybody to tell me yes or no. Then we're gonna do the corrective waves, right? So we have A, B, C. Now we have a whole new trend. Yes, perfect. Now we have a whole new trend. So we had 0, 1, 2, 3, 4. 4 to 5 was the extended push. Some people can argue that, yeah, why would we call this? This is all one move to the downside. We did not have, as we had here, we had lower highs creating here. But then if you can notice, these were slightly different, more adjustments. So we can either call this, the fifth wave, but the market just kept going to the downside. The market never corrected itself to the upside where it created a new a new higher high, because this was the previous high and now we have a new higher high here, right? So when the market created a lower high in this sense, a higher low here, I knew that our trend to the downside was exhausted. For those of you guys who have watched the market structure video or did the market structure training with me, when you understand when the market's on a downtrend, right, you know that after the market retests or breaks past the last previous lowest high point of the market, here's your lower high. Wrong one. Here's your lower high. Here's your lower high. When the market breaks past that lower high point and it comes back to retest the same price as it did right here, then you know that that downtrend is no longer valid, right? Make sense, everyone?
Yes.
You see how it starts to make sense, Brandon? I know we were talking about this in Florida. You see how the the lower high points were broken, when the market broke past that lower high point and it finally retested it here, notice what other confirmation it gave us here. A nice inverted head and shoulders. Or now, as we're talking about the Elliott waves, here's 1, here's 2, here's 3, here's 4, here's 5. Make sense? How you feel with that, Brandon?
I mean, I'm good. I'm looking at it. I see how, like, someone that's new, I would have put the 3 at the bottom, but I see how that's all one movement. It's kind of like an adjustment, but it's all still one movement compared to the 4, where it's a bigger kind of gap, I would say.
I mean, at the end of the day,
yeah.
You can start your Elliott wave from the retest of the last lowest high point.
Okay.
Because that is the retest of the inverted head and shoulders heads fake, which is a fake out of price, right?
Mm-hmm.
That last shoulder is the retest. You can do it. There's no saying here saying that I'm not gonna sit here and say that that's incorrect, because again, all of it matters is you can either be doing it from the fact that this is now a higher low point, right? Or you can wait for the retest. To me, it's still one move. You know?
Yeah.
Let's look at it again. So here we have 0, we have 1, 2, 3, 4, 5, right? Let me see if I can change the color. What's a good color? Red? What about purple? Yeah, purple stands out. So we have that. That's your impulsive waves, right? Now we're going to work with the corrective waves. We have 0, A, B, C, right? The market dropped to confirm the uptrend. The market shot up after that. You see that?
Mm-hmm.
So again, what's another sign of confluence here that downtrend is exhausted now, right? We had a double bottom at this level here. You see this here? So let's combine everything that we've discussed over the last month or so. So let's identify our supply and demand zones, right? Here's a support. There's a price point here. I'm going to identify this as a demand area or a possible supplier, right? But I know that's an important price point. Here's another one here based off of the rejection of this price. And I'm going to go off of this rejection over here. There's another zone. How we confirm it? Look left. Does it make sense? Here's the fake out. Here's the retest. Market shot up. Here's the fake out. Here's the retest. Market shot up. We're good. Right? Here's one zone. I'm going to delete this. I'm going to delete this. I'll also delete this for now. These are our bottom zones. Let's identify our higher supply zones. This one here. And here's the price here. Boom. I'm going to use this price point here and the highs of here. Might as well just do it based off of this one here. So now we have our zones. I hate red in this thing. Sorry about that. So now we have our zones, right? Let's go back to it. We have lower high points here. What did we have? We had a fake out of price occur over here. The market never clearly retested this price until it did over here, right? Now we have the market come back, go down here. We're going to identify our Elliott waves again, right? Let's go Elliott waves here. There's 0, 1, 2, 3, 4, 5. Right? The market faked out of this zone here. So what do we need to confirm this fake out, Brandon?
Retest.
A retest. So what did the market do in the first corrective move? Right? Shot up, retested. See that?
Mm-hmm.
Shot up, broke out, retested on this price point, which was the last lowest high point. What do we have? Your best buy entry you would ever find on gold. Right here. 0 drawdown. You probably never saw negative if you entered at this point. And if you rode it to the next zone above, you would have made 8,944 pips in 72 days. Just giving you an example. Obviously, I'm not going to hold no trade for 72 days, but I'm giving you an example of how simple it is, because after C, right, you're going to wait for the retest of price. You can either enter at the retest of this zone here, or the last touch to this uptrend, or you can wait for the last retest of the previous lowest high, and now you have the market going up. I want to open this up to questions. Does anybody have any questions or anything that did not understand? Jomar, how's this feel with you?
Oh, that was good. I'm good.
Let's see. Brad?
Nope, I'm good for now.
Perfect. I would love to know if Dean understands. Dean. See if I can mute him. I know sometimes he gets in when he's working. I'll message him privately. Glory, how you feeling with this? Make sense when you put it all together? Joel. Jeffrey? You hear me, Jeff?
Yeah, I can hear you.
See, I mean, I know you're new to this, but seeing it like this, putting it together with what other things, does it make sense?
Yes.
Perfect. Furman? Oh yeah, Jose Furman?
Yes.
Perfect. Noel? Salah Melis, Jose Gonzalez?
You know it, brother.
Sense for me.
Perfect.
Sorry.
No, you're good. You're good. Brandon, you don't have no questions, right?
Not right now, no.
Perfect. So let's keep it at this. I wanna share something with you guys as well, that I was talking with Jomar and Jose Gonzalez this morning. And you guys are working extremely hard trading. Personally, I'm a big person, and you always hear me say, if a trade stresses me out or anything, I always like to reward myself in return for dealing with that. I want to talk to you guys about you guys making it a habit where you're paying yourself for the time you're putting into learning this trade. I mean, and I'll let Jomar speak on this as well. We were talking about it in depth, how, sometimes being greedy as an investor is also you not paying yourself back for the work you're putting in. For instance, I'll give you an example. Someone like Jeffrey, Jeffrey's a very hardworking man in his industry of real estate, and he's dedicating his free time to learning this. Let's say you make $100 in a trade. Man, buy yourself something nice with that trade so it can help your psychological aspect of trading feel better. Because now, let's say you bought yourself a nice custom shirt or a suit. You understand? Go ahead and identify the fact that you paid that with the skill set you've been practicing. It's going to help you overcome a loss way more than you just making all this money on Forex but never touching it. That you're not going to improve psychologically. And I'll let Jomar chime in on this. Jomar, are you there?
Yeah, I'm here.
Why don't you, especially, you know, that we were speaking about this, share an example where, you know, you had the chance to take out, but, you know, then you lost it, and then how you feel after you didn't take it out. How if by simply sometimes just withdrawing what you felt like you should have withdrawn can eliminate that for you.
Yeah, basically to what Jail's point, I'm gonna be a testament to what he's saying, because for quite a while he was telling me, always treat yourself or take profits, and I was like focused on building my account, and which I was able to do so, but then I took a little bit of a setback, and after I've been actually for the last 2 weeks thinking about that, I truly said to myself the last couple of days, I should have paid myself when I should have, because then it makes the pain a less easier to just get by it. So to his message is that if you made profits, you don't have to take everything, but take at least partial profits, and you can continue to stay. I mean, when I mean take partial profits, pay yourself or reward yourself, or do something with the money that you're making, so that way you be able to on a weekly basis make it a consistency on paying yourself. And it's when you do take a hit, it's less painful, because just like any business, if you was to go open up a business right now, you're gonna definitely have to get in debt to be able to run that business, unless you have a cash load of money to open up any business. And you're gonna have losses in a business just like anything else. So, and you want to see it from the same perspective, so that way it's much easier to manage and less painful. But I would definitely agree that you pay yourself if you're making money. Don't try to just focus on building, because psychologically, when you do take a loss, it's going to be easier to just get past it, just because you've paid yourself. So it's not going to be something where you just try to build the account and you never paid yourself.
Correct. I think it does more damage to you by building, and I speak from experience. I think it does more damage for an investor to dream about what they could do with that funds after they make it and they never touch it, and then they lose it. You understand? I think it's a harsh example, but I think of like someone who desperately wants to be a mother, and and unfortunately they lose their child, and all the thoughts you had about what you could do with that child and all of this. It's the same thing with this. You guys, it's not hard work. This is not hard work at all. I think it's one of the most easiest things out there to make money. The hard work is you controlling your emotion, you controlling your greed. You understand? And like I heard in a podcast early in the week, and it's true what he says. Being greedy is just like you over risking your account as you over reinvesting your account over and over, knowing you could use the funds, right? And you not rewarding yourself in regards to that. So I'll give you an example. One time I had built this account. It was like $100. I built it to like $13,000. This was back in 2014 or 15, one of those 2 years. And man, I was like, yo, I'm the fucking man. I got this shit down packed. I'm a man. Yo, ain't nobody messing with me. Get out of here, IML. Get out of here, World Ventures. Get out of here, WG. Yo, I'm the man. I got this, man, And I'm like telling my wife, yo, we're going to go to DR. We're going to do this. I'm going to buy me these sneakers. But, I processed the withdrawal. The withdrawal took some time to be approved, so the money was never taken out of my account. I kept trading. I think you know where the story goes from here, right? I lost every dollar of that. I had gotten my lady excited that we were going on a trip. I had lend out money thinking I was having money coming out. I overspent money in the clubs. I went to a restaurant every day. We ate out every day. I was broke as a joke. I wasn't getting paid for another 2 weeks, and I blew my whole investment account. You know, and that right there did more damage to me than me placing a $5 lot on a $1,000 account. You know, I share that with you guys. I want you guys getting into a habit. You get into a trade, the trade took longer than what you expected. Maybe it went wrong on you. And then you finally, you know, got re-entered it on the exhaustion level, and that trade kind of had you stressed out. Whatever it is, man, even if it's $30 you made in profit, take out those $30, do something with it. Go get a manicure. I think I told Salar Melis one time she made like $60 off a trade that took her like almost 2 weeks. I was like, yo, take that shit out. Go get yourself a massage. Go get yourself a manicure or something. Treat yourself. You deserved it. Make that. I say it to you guys all the time, and I will always say it. It is easier to withdraw $100,000 from a Forex account than it is to build that to $100,000. All right? I'm not saying that it's not possible, but I believe that if you can put $5,000 to $10,000 every month, every 2 months, every 3 months extra in your pocket, aside from what you got going on in your life, I'm sure it will make a bigger difference than you stressing yourself out over the span of 6 years trying to build an account to 100 grand. And building it up, you get to 20,000, then you burn it all. Then you build it back up to 35,000, then you build it up, burn it all. It's the sequence. You guys, when you guys start winning, I can tell off the bat, most people who start getting consistent, it takes them to lose it all to really realize, man, I really got to start studying. I mean, there's 200 plus students in the school. How many times do you think I hear that? And I wish I could tell you, yo, bro, I told you, don't stop learning. Listen, I told you, don't stop learning. Keep applying what you're learning. Even when you're doing good, keep doing it. You think Kobe Bryant stopped taking shots when he had a 60-point game? I'm sure he went back to the gym and shot even more. You know? So I share that with you because a lot of you guys are reaching that point where you guys are starting to make money. You guys are starting to see consistent results. But some of you guys are now withdrawing money. Some of you guys are just, you know, leaving all the money in there. You know, reward yourself. Buy yourself a pair of sneakers. Go out for dinner. Take your wife out somewhere. If you haven't been spending a lot of time with your family because you've been working hard on studying on this, you make $200. Go for a nice dinner with your family. Go for a nice getaway for the day or for the weekend. Do something. Reward yourself and reward those around you that are being patient while you learn this. I promise you. I promise you. I promise you that will feel way better than you trying to make 10 grand and then burning it. All right. Does anybody have anything they want to say or share with before we get off of this? You guys can all type 1 in the chats if you don't. 2 if you want to.
Does everybody understand why JL is saying that?
Yeah, I think that's the more important question to ask actually.
Does everybody understand to pay yourself?
Yes, put a 1 in the chat if you understand. Throw some 1s in the dish.
Like I'm about to do right now.
Some $1 lots. I know Furman dying to put them dollar lots. I know Brad want to drop a $1 lot. I know Noel puts a $5 lot on a $200 account. That guy's wild. Stay away from Noel, guys. Jose too. You gotta be careful with that guy. Can't trust the man who wears gel.
Tell you.
Let's see. Jeffrey, you good? Salamelis, you good? Yeah, I like to share with you guys a funny story. So when I was in Florida, I was staying over at my aunt's house, and you know, I would tell Furman to come over in the mornings, and I would always text Furman before he would come, like, yo, bro, bring a box of Krispy Kreme donuts. And, you know, every time Furman came over, he came through with a box of Krispy Kremes. And my uncle's, Furman, you work making donuts? Yeah, and Furman didn't know. He was like, no. But it was funny because at the end of the day, you know, the man kept showing up with donuts and they thought that this guy was working making donuts. So don't trust a man that don't come to your house with a box of donuts, man. But let's leave it at that. It was a good webinar, guys. I'll give you guys a few minutes if you guys have any questions or anything you might like me to go over. But other than that, I'll see you guys mañana.
Joe, is that a inverted head and shoulders right there that we're looking at on gold or not?
Where? Use your annotation tool to draw it out. Where? Here?
Yeah, basically. Well, I'm seeing it a lot bigger. I'm trying to, where do I draw?
This is on the daily chart, by the way. So.
Correct. Yeah, that's why I drew it up earlier on my chart.
You saying this right here?
Yeah.
It could be. Could be.
Gold is on a sell, probably go down a little bit more.
Yeah, I would like to see it drop further down here, like 1260. No more than 1236. I would like to see it drop to eventually.
Yeah, drop.
That'd be nice. I believe gold is gonna drop to 1260, which is this upcoming support zone. It's like a demand zone right around here. I believe it's gonna come back to retest. If it does hit that point, then it will give us the signal of a double bottom, which will start that uptrend, which kind of gives us what we're looking for here for the inverted head and shoulders to play out, which ties in with UJ coming down to 1097 eventually. You know, oh yes. Tomorrow we'll talk about correlations real quick. We'll get on for 30 minutes, 45 minutes tomorrow. We'll talk about correlations. For some reason, the video that I have recorded, it's a corrupted file when I try uploading it to YouTube, and I can't manually send you guys the video because it's a large file. So we'll go through that ourselves. I'm gonna upload tonight's video, and it'll be in the chat before I go to bed. But other than that, I hope everybody has a great evening and continue working hard. I'm extremely proud of everyone, and I wish everyone a profitable day tomorrow. Good night, guys.